Thank you for having me.
And, rather than our conversation, 10 minutes we met. I had a small intro. I heard a small brief intro about you. Could you intro yourself to the viewers or for anyone who's listening? What are you doing? Where did your career start? You mentioned you started in real estate, and now you're working in crypto. So just take us through a small journey of your career up until now.
Yeah, sure. I'm Brandon. Was born and raised in Los Angeles. Before starting Coin Ark and being in crypto, I was primarily in real estate. All kinds of commercial real estate, but mostly multifamily in Los Angeles and Southern California. I handled like kind of all aspects from A to Z at one point. It was just kind of starting from underwriting deals, property management, and then eventually kind of being the chief financial officer of like, $50 million ground up construction projects.
Oh, wow.
Managing budgets for that. Yeah. So I kind of was doing that and was playing with crypto on the side, and had fully pivoted roughly 18 months ago. Just, at a certain point, it is just way more interesting. And you kind of just, instead of that kind of redundancy of, okay, let's find a deal and
right.
Let's renovate the units and let's bring the rents to market. You just see kind of like once you fall down this rabbit hole, how fast the world is changing and how much kind of like in the last 10 years was way more transformative as far as technology as the previous 10 years before that. So that kind of led me to dive all into crypto in 2021, and really just started to push, not only investing in projects, participating in governance, etc. But I, had co-founded an NFT project called SoulSphere back in October, where
right.
on Solana blockchain for those who are familiar. But pretty much the overarching problem that we saw was, okay, everyone has these NFTs, they love all their NFTs, but they can only kind of show off one of them at a time as their profile pic. So me and my cousin, we said, hey, let's create kind of like a central place where someone can just like post a link and then just display all of them. So we kind of created a digital land concept where you can actually connect your Solana wallet, whatever, Phantom or any of those wallets, and then just display like kind of on billboards. You buy a piece of land and display the billboards. So you can kind of call it like digital advertising in a way, but not you're just advertising your own NFTs.
Okay. And
yeah,
go ahead. I'm sorry. Go ahead.
No. Yeah. I mean, so I just kind of got really, really into it. And earlier this year in January, I wrote a blog post about this, but I actually had sold all my crypto for two reasons. Number one was because I kind of, saw the writing on the wall. And we can go more into it about why, but I mean, just kind of like the thing that is, pushing all asset prices up was now turning to a 180 and pushing it all down.
Right.
And also I just kind of had this vision to start this fund and just start, doing crypto professionally. So I sold that in early January, took that capital, started Coin Ark. And the rest is history.
I love that. And do you plan on going back to real estate? Because I mean, when we listen to any individual who started a startup or built a company and then they sold it, they go ahead and jump into real estate because real estate is the way to make money on the long run and to build generational wealth. You kind of went the opposite way. You were in real estate and you left real estate to jump into crypto. Do you plan on later on going back to real estate, or do you still do real estate on the side?
Yeah, I think real estate is one of the best ways to preserve wealth, especially in the United States, because you have kind of like a plethora of tax benefits, right? I mean, and like the amount of tax benefits you have is just kind of unprecedented, and it's really not that common that people know, how much you can depreciation, 1031 exchanges, adjusted basis. Like these are all things that it is really beneficial for somebody to make money to kind of diversify into real estate. However, diversification is usually just a preservation of wealth.
Okay.
It's not really you need to be somewhat concentrated and have high conviction in order to in the right asset class, of course, in order to kind of create wealth rather than just preserving it.
Okay, and I love the answer. And you're right in I mean, in the States, especially the tax benefits, all the aspects you get of working in real estate. There's a saying that real estate is the best way for dumb people to make money. I forgot the phrasing exactly, and I'm not saying that, but because they say it's an easy way to make money. There's an easy way to make money if you understand it, if you go into it. But how technology has shifted, and this is where our podcast is going to be mainly focused today, speaking about crypto and why you jumped into crypto and your fund. You mentioned that you really went ahead and sold all your crypto holdings and started Ark Capital. So you basically took all your crypto holdings, sold them, whatever money you made, you started Ark Capital with, Coin Ark Capital with. Is that true?
Right. Yeah. So I just used that capital just to kind of start it. It wasn't, I mean, I used to do real estate syndications, like pooling money together, and
right.
Starting a fund is a very, very different process than like, it's not just like, hey, friends and family, let's get in and buy this property. It's SEC regulations, state regulations. It's a little bit different, but once you get past all that weird stuff, like it's exactly the same. You're just trying to optimize.
So Ark Capital, Coin Ark Capital, what is it? Do you accept outside money? Do you just manage your own money? Do you have investors with you in the fund? Could you tell us more about it?
Yeah, sure. I just want to start by saying kind of like anything that I say is just not financial advice, nor is it a solicitation of an offer in any way. But yeah, I mean,
and I was going to mention that at the beginning of the podcast. For anyone who's listening, this episode is not an investment advice in any way. We're not trying to sell you on any crypto, any coin, any project. Just a conversation for you to listen, enjoy, maybe learn something new, and have fun.
Right. Yeah. So I started Coin Ark, and just, this is like very recently, and, I've hired already an analyst and actively hiring, for various different positions. But yes, I mean, we were taking outside money, of current relationships, as per regulation. But the goal is to, essentially, we are a thesis-based fund. I mean, we invest solely based on our theses, long only, no leverage. And the reason for that is, although in technology, it's not really helpful to be backwards looking, and it's more helpful to see where the world is going. You can clearly see in crypto that, the people who outperformed the most were the ones who did not use leverage in any way. Right. And just kind of stayed invested through market cycles and had high conviction in their theses. Obviously, if they were right. And we saw this, this current example where we had Three Arrows Capital, $10 billion fund. I mean, you could imagine these guys are the most prestigious and smartest guys in the room. And I'm sure they were very, very smart guys, but for a $10 billion fund to blow up because of leverage, it just goes to show you that no one is immune. Right.
Yes, exactly.
So I mean, that's what we're doing, and we have various different theses for where we think crypto is going.
And you mentioned a couple of, and you mentioned that, and when I was going through the website trying to learn more, you said your fund is a long only funds, and thesis driven and high conviction. And I want to get deeper into each one of these. What does each mean? What are your theses? And what do you mean when you say long only funds? And what I understood from long only funds, Warren Buffett has a saying that it's not the time, it's not timing the market, it's the time in the market that matters. I guess this is what you're aiming for, being in the market as long as you can. If you could take me through the three convictions you have for your fund and what does each mean?
Yeah, sure. I mean, high conviction and thesis driven are a little bit correlated. However, I mean, we can just start with long only. I mean, long only just pretty much means that you are just buying the asset in anticipation of it going up. You're not shorting in any way. We don't use any kind of, I mean, we're not planning on using any kind of derivatives. We don't short. And it's not the reason why you can't make money. I know there are like a lot of prop trading firms and who use like different kind of algorithms and ML, machine learning, and it's okay. I just see like, this space is compounding exponentially, right? Like it's very, very difficult to kind of time those moves.
Right.
Usually just buying the things that work with your thesis, and we look at network effects a lot. Those are the things that will actually, in the long term, compound the most returns. Having a thesis and being highly convicted, and the reason why we use high conviction is because this is a very volatile asset class.
Right.
I don't know really about the entire crypto market, but I'm assuming it's way higher than Bitcoin. And Bitcoin's a 70 vol asset. I mean, like it's
Right.
more than twice as much as traditional markets. So, to withstand that volatility is, first of all, like, if you're trading on leverage, like it's very, very hard to do with that kind of volatility.
Yes.
You're just going to get liquidated. But also just to kind of like to stay convicted in your thesis, because you've done the work, and you not assume, for lack of a better word, assume, but you have an idea based on whether it's like past data or current data, where this market is going, and how these network effects are going to compound. I mean, like the biggest network effect we look at is just kind of like, does the marginal user make the network more valuable, or at a certain point, is there an S curve where it just doesn't matter anymore?
So in a way, you're looking at, are developers building systems on that, let's say on Ethereum or Solana or whatever, are more users building on top of it, creating the network and making it better? Is that what you're looking at, basically?
We have 3 theses currently so far.
Right.
These are obviously subject to change, but we really believe in just investing in the tools and infrastructure for NFTs, like the tools that creators are going to be using to create NFTs in the future as this ecosystem gets built. The second one is monolithic blockchains, rather than modular, like Ethereum and Polygon. Like these are all kind of like scaling solutions for like one kind of blockchain, and then they have other blockchains such as like Solana and Aptos and Sui that they're just kind of focused on having all the transactions in a single data set, and there are a bunch of trade-offs that we can discuss later if you want. But lastly, I mean, like the biggest one is just kind of crypto projects that incentivize behavior, both in the physical and digital world, right?
Okay.
And Helium was a great example of this, right? So these are the things we're focused on. Lastly, like we're very focused on looking at, again, those network effects, because the network effects will dictate eventually, how much the asset can compound in the future, right? I'll just give you a quick example. Like, if you have, let's just say like, 10 Uber drivers in Los Angeles, like the value of the network is not much, right? Because you're not going to be able there's no capacity to fill all that demand. But every marginal user brings in more drivers, right? Because there's money.
That's true.
And when there are more drivers, you can kind of you can adapt to more users. And then with Facebook, on the other hand, it's kind of like, or Instagram, for example, it's like right now you have like 2.9 billion users on Instagram, right? Okay, if you add another 100 million users to Instagram, the value of the network is not going to compound that much, right?
Right.
At a certain point,
there's already enough value on there. The network effect is already built in a certain way.
Right. So at a certain point, it's like, okay, does the marginal user increase the value of the network, or is there like an S curve where at a certain point does it stop, right? So like the first, maybe the second or third set of 100 million users when Instagram was very small, like that was much more impactful than for example, what it is right now.
Right. And talking about the network effect, there's a book I'm currently reading. It's called the Cold Start Problem. And the author goes ahead and speaks about all the network effects, starting with Uber, Tinder, Reddit, all these different platforms and how they tackle network effect. And I think we could take lessons from these and just apply them to crypto and different crypto projects, different crypto coins, different crypto networks, and see how's the network effect going. Did we reach maximum potential in these network effects to base our thesis on in any fund or any project you're starting? Heard David Sachs, he's one of the investors in Yammer. He owns a huge VC fund investing in SaaS projects. And and he speaks about network effects in crypto and like where our usage and how do they look at projects in crypto by speaking, oh, we look at Discord at where developers are working to see their adoptions to projects and base our investment thesis on that. So great point you just mentioned there. And you could answer that, or if you don't, you can't, don't answer it. What are some projects you've invested in through Coin Ark? What are some coins? Is it just Bitcoin, Ethereum, or are you going into higher risk projects too?
Yeah, I don't want to really just comment on exactly what we're holding, but I can tell you, first of all, I mean, like, we're entering this market with a lot of caution, just given the certain market dynamics. That's not to say when we do enter the market, we don't know what we're going to be buying, because we know exactly what we're doing. Our portfolio, at least for our current fund, is just an allocation of, large caps, mid caps, small caps, just so, if crypto succeeds, we don't want to be lagging it, right? Like, as a benchmark, we want to be outperforming it.
And the reason I'm asking is not to maybe speak about specifics in your fund, but more to know, because we heard Michael Saylor, he has most of his company buying Bitcoin, and he has a large holding in Bitcoin. Other people are going a little bit of, like, let's say 40% Bitcoin, 30% Ethereum, and then the last 20% going into high risk assets. So like, how's your distribution? What do you think about these different type of distributions and asset allocating?
Yeah, I mean, I think, me personally, I think Bitcoin is one of the biggest distractions of one of the most revolutionary software technologies that's coming. Not to say Bitcoin is not valuable. It's just valuable probably for the reasons that many people don't understand. People are very susceptible to just falling into the current narratives, right? Like, oh, Bitcoin's an inflation hedge, or like now, oh, like Ethereum, the merge. And those narratives are very, very deadly, right? Because like when you fall into that trap, it's very hard to kind of come out. I think you can answer that question with kind of saying like, for example, like, what are you investing in crypto? It's kind of like you have different sectors. Like the only purpose of a blockchain really is just to kind of store state, right? It is a public ledger, at least permissionless blockchains. It's just a public ledger, right? Where people can transact in a permissionless way, and they can transact in coins or tokens or value being NFTs or whatever it is you want to do. You can just transact on it. Bitcoin was the first one, but you can only transact Bitcoin, right? Because the block sizes are just too small. It literally is too slow to handle anything else that you'd want to be able to do. So it's a perfect way of just transferring value, but not really anything else. And then Ethereum was like, hey, you know what? We want to do that a little bit faster. So instead of 10-minute block times, we're going to have 13-second block times. But then I got to the point where it's just not scalable anymore, right? And then like, Solana and AVAX and these guys kind of came out and said, hey, we can do this much faster and much cheaper, obviously with different trade-offs being there. And you can just invest in any of these things, but it's just kind of like, what are you optimizing for, right? Okay. So...
This brings me to my next two questions, and these questions will be more sort of defining some terms in crypto, especially that this is one of the first episodes I have on my pod that's just a whole in the Web3 and crypto world. So maybe take it step by step and explain Bitcoin, Ethereum, Solana. These are the main three names we always hear about. You kind of went over the benefits of, or the main attributes of each, and you were saying each one has a trade-off. What is the use case for each of these three, and what is the cons or the trade-off you do when you're using Bitcoin, Ethereum, or Solana?
Yeah, so the trade-offs, like the pros and cons. I mean, look, like Bitcoin is just, it has that kind of Lindy effect. It is the oldest and most liquid asset, right? But you can't really use it for anything else other than that, right? Like. I remember
it's basically just like gold. I mean, before they traded gold, now they can't do anything with gold unless buy it and store it in a bank.
Right. Like, like do like, are you excited when you buy gold? Then just, put in your safety deposit box. Like I mean, it's great to kind of like, like it's scarce and it's, you hedge that in a way. I don't know. I just, it's just not exciting. Right.
Okay.
Ethereum, on the other hand, was kind of like, hey, we're going to build, for lack of a better analogy, kind of like an app store where people can just kind of build apps on top of this.
Right.
And we'll provide like the decentralization, the consensus to make sure that like all the transactions are valid. And then like you guys just build the apps and you just, the fees will kind of accrue to Ethereum. And they're changing that right now, not to get into too many detail with the merge and ETH 2.0, like how that's represented. But the trade-off is that really it just was not usable, right?
Okay.
Like the only thing Ethereum has going for it right now is just NFT volumes. Like it is by far the number one platform or number one, blockchain for NFTs. Other than that, like, and maybe a little bit of liquidity, but other than that, like everything else is on other chains.
Are people doing smart contracts and DAOs on Ethereum, or are they shifting to building them on different blockchains?
Yeah, it's definitely shifting. It's if you just kind of look at it by year-over-year basis, you're starting to see that it's just not practical for. I mean, on Ethereum, every single byte of code that is being developed, like on any of these apps, are optimized so there are as little steps as possible because there are so many fees, to do whatever it is, right? To like, at the height of it, it was like, $80 to $200 just per transaction. So if you want to just kind of stake something or like you want to do a trade, it's just nonsensical.
And that defies the purpose of why people loved crypto in terms of taking. When you pay online, you're using Stripe fees. People went to crypto to not use these fees, to be free of the systems we're having right now. And then we're jumping in and we're having gas fees, which defies the purpose of why people were excited in the first place. Right.
And those gas fees, I mean, they were the reason why they were so much was because it was a scalability issue, right? Like you just had so much, the blockchain literally could not handle the capacity. And now they're just doing all these scaling solutions, but, that's another topic. So that's the trade-off you got with Ethereum. It's like decentralized, like, it has definitely like, as for a smart contract platform, like the largest inertia but you just don't have like, you pay all those fees. Okay. And Solana, on the other hand, is like kind of this new one where they were like, hey, you know what? We're just going to build this new platform from scratch. We're not going to kind of fork or like kind of copy and paste Ethereum code just to all these other blockchains. Like we're just going to kind of make our own. And we're going to do it in a very different way that, in short, is just, hey, we want super, super fast block time. So instead of having 13 seconds per block time, we're going to have it like literally under a second, like 400 milliseconds. And with practically no fees. I mean, like transacting on Solana is like a fraction of a penny.
Okay.
And there's reasons why, because like, the validators have, much better hardware. So the hardware requirements are better so they can handle it. For now, the trade-off is that you just don't really know when exactly the blockchain is going to be functional.
Okay.
Right. I mean, like these guys are just moving so fast that you have like every few months you just have an outage. You can argue why that's okay and why it's not. I mean, it's okay because you're like, okay, you know what, like they're really just advancing what a smart contract platform is. But it's not okay if you have like a position on Mango, like a decentralized exchange, and then all of a sudden, because you can't manage that position because the blockchain is down, you get liquidated. So
there's trade-offs. There trade-offs. I mean, just like when the .com era started, we saw these different outage, these different failure projects, these different stuff that caused this horror scene. We're seeing that in crypto because it's growing, and it's growing at a much faster rate than the .com era. So, which gives you the benefits. But if you want to be in there, you should study whatever coin you're using, whatever market you're using, and manage your way inside it in a careful way. What we spoke about these three main coins: Bitcoin, Ethereum, and Solana. What other cool coins are you seeing? Because you're in the space. What other coins are you seeing? Other cool projects you're seeing that maybe they haven't got to this huge network effect yet, but are on the way getting there?
Uh, I would say the projects that are definitely the most interesting and where I'm focusing really 50% of my time are projects that kind of emulate Helium's business model for different businesses and sectors. Like for those who don't know, Helium was kind of like this network where they incentivize people to buy antenna hardware to bootstrap a IoT network. And these people, they just bought the hardware and they would get paid in HNT tokens in order to kind of bootstrap that network. People don't realize that that's like one of the most disruptive business models ever, because essentially what you're doing is that you are taking the cost of capital expenditure for the traditional model of building a network, which is like, hiring a bunch of people, like, putting up a bunch of antennas, like dealing with like, where land leases, and it just gets so capital intensive where if you reduce the cost of building a network to almost zero, the product or service you're going to be offering is a fraction of the price of the incumbent.
Wow.
And that's like so highly disruptive, right? So like, I don't know, like Helium, you can argue there are many arguments why Helium is valuable or not valuable today. But it is nonsensical to think that that business model is not highly disruptive and it will not already disrupt a bunch of other projects. Like I'm seeing a bunch of other industries. Like I'm already seeing a bunch of projects who are just kind of emulating this and just really doing it in their own respective industry. And that's where I'm really focused on a lot of my attention.
I love that. I mean, and this is what I really think. People are investing in crypto because they want to see the price going up, or in Web3 projects because they want to see their price going up, or they want to make a quick profit. But the real use case is disrupting these large industries that require a lot of capital and that have a monopoly. You could come in with a crypto project, disrupt them, and make more people participate in the system. And that's what really Web3 and the whole crypto market is about, or different crypto projects is about.
Right.
The next set of definition I want to go ahead and ask is, we've been saying the word crypto, NFT, Web3, DeFi, decentralized finance. What do these mean? If someone is new to the space, if we could go quickly and just mention what does each of these mean, or what does it stand for, what use case does it have in the real world, that'd be great.
Yeah, crypto, NFT, Web3, and DeFi. So I think the term cryptocurrency is a misnomer, right? Okay. I don't think these are currencies. Like stable coins like USDT and USDC, these are currencies. But if they are currencies, they're the worst currencies ever, and they're not meant to be currencies. These are assets, right?
Right.
Crypto is just the basic ecosystem. It's all of these things that are going on digital blockchains.
Okay.
NFTs, which are non-fungible tokens, is a token representation of really anything you want. I mean, people think it's just art. It's really not just art. Art is the proof of concept that these things can actually work on a distributed ledger, but it is definitely not restricted just to art. So NFTs can be a token representation of any kind of asset, real estate, your watch, just really anything. Web3, in my example, was one of the buzzwords on top of Metaverse, which I don't think if you asked 9 out of 10 people, they wouldn't have no idea how to explain it. And the reason being is because nobody really knows what it is yet.
That's okay.
So if I could guess, it's probably something on the intersection of self-sovereignty and money and data. But I think we're just going to have to wait and see how that plays out. Going from Web 2 to Web 3. And DeFi is just permissionless finance. I mean, it's kind of like, a lot of the things that you and I are not able to do on the traditional markets because we don't have a certain kind of AUM, like we don't have an ISDA to do like $1 billion spread position. That's all stuff you can do with DeFi. I mean, DeFi is just pretty much, it allows more capital efficiency and transparency.
Right.
It's really interesting actually because, the commissioner of the CFTC I think 10 years ago, Giancarlo, I forgot his last name. He came out publicly, like on the record, and said, had there been like blockchain technology before the great financial crisis of 2008, like it would have severely mitigated it. And the reason why is because you would see on an open ledger, like it's just transparent, all the risk building up in the MBS markets.
Wow. Okay.
So, yeah.
I mean, what you just mentioned now proves more and more how the system is restricted, and we need to get out of it, and by finding new ways. The way I define all these four terms, I see Web3 as the world where they're sitting in, just like the internet. The Web3 is the new thing. Crypto falls into the coins or the currencies we're going to use. NFTs falls for like the tickets you could buy, the art you could buy, any kind of like, asset you could turn into an NFT. And then DeFi is your finance market that you're working in. And they all fall into Web3. This is how I kind of imagine it in my head. And you just went and explained each of them. You speak about adoption earlier, and in one of your blogs, you speak about adoption of the market and the term incentivize, or what are people incentivized to use these coins. Let's speak about adoption, and what trends are you seeing in terms of adoption? Are people using Web3 more, using crypto more, or after this cycle of downwards market, did the adoption slow? Where are we in terms of adoption and trends?
Yeah, usually, I think every year other than 2018, the number of people using crypto has gone up exponentially, right? I think it's like twice as fast as the internet, something like that. Usually kind of like, in market downturns like this, where they go down like 50, 80, 90%, you have a lot of like the tourists just come, the tourists that just came to, flip NFTs or make a lot of money. And then now they're down, they're just going to leave, and then usually just come back in the next cycle. I'm not seeing that right now. Okay. And yeah, I mean, like volumes have come down, like, NFTs are not, NFT volumes have come down. But for example, like on Solana, the 7-day active users are at all-time highs.
Wow.
I think it's like anywhere from 4 to 7 million active users on a 7-day rolling basis. And that's like really interesting, right? So I don't know if it's just, we're going to follow historical trends where like you kind of have like, 3-4 years of like, more and more people coming into the ecosystem, then just kind of 1 year of like some people leaving, and then you just kind of go back up. I don't really think it matters because, on a longer term basis, you're just starting to see every few years, the ecosystem is compounding exponentially. I think we're at like 300 million users who have used crypto, right? I wouldn't be surprised in the next few years we surpass that billion mark. So,
wow, okay. I love it, and it's true. I mean, of course, weak players are going to get out of the game, and we're going to have the people who have conviction, who are building in the space, are going to stay. And with time, more people with higher conviction are going to stay in the game and build in the game. Here's a quick question, and it's a fun question to think about. Are we going to see a day where we have a cashless civilization on all what we're using are coins in Web3 and crypto?
You mean like day-to-day transactions and...
Yes, and everything.
Yeah, I think it's really important to understand kind of like, okay, is there a day where we just never have dollar bills? Like, I don't know about that, right?
Okay.
But money is already kind of digital if you think about it, right? Like, like you and I, like, let's just say like we go to dinner and you want to pay me half, you're just going to Venmo me. You're usually not going to pay
or
me.
Zelle you or PayPal you.
Right. I go to a restaurant, I pay with credit card. It just shows up on my Amex and then my bank account.
Right.
Moving past that, it's just kind of like, okay, will the government kind of, enable CBDCs like central bank digital currencies, which they're already kind of looking into and China's already doing. And what that on a distributed ledger and that's a permission ledger, what that just allows you to do is just kind of control what people can spend money on and what they can't, right? Like, hey, like we sent you just $100. You can only use it at Ralph's and it expires in 2 weeks, or else, we get the money back.
Right.
I definitely see that happening.
And the reason I asked is because 3 or 4 years ago, I was watching a documentary about China, and the documentary was amazing that 4 or 5 years ago, before COVID started and we saw this acceleration into using more credit cards and online payments, they already had that. People would go to the market, they'll buy fruits or meat, and they'll use their WeChat app to scan a code and just pay. And that's for everyone in the society. Like even people who weren't advanced technologically were using WeChat to pay through QR codes and they don't use cash. I'm like, wow, we in the US are still a little bit further than them a little bit. We haven't gotten there yet. And I want to see a world where this happens, because it controls a lot of stuff. It controls all these different paying cash to buy drugs, illegal weapons, illegal drugs, or human trafficking or whatever. You have this on a system that's controlled. And it has its cons too, that we're more controlled, we're more defined in a system, but it has its cons and benefits. And it's an interesting idea to think about.
For sure, 100%. It's funny you say that too, because I always I always kind of wonder whenever they were like, oh yeah, crypto is used for illicit payments. Like, why would you? If I was using crypto for illicit payments, I would just use cash, right? Like if I was buying something illegal in large quantities, right? Like why would I want to do it where Chainalysis, one of these companies that work for the government to track crypto payments, they can easily just kind of find which wallet I use it on. It's just
yes, I mean in crypto you still have wallets. People think that in crypto, okay, you just make a payment and it just disappears. No one knows about it. But there are wallets existent that, okay, if you do large amount of sums that you're buying something, people could link these transfers of sums from a wallet to a wallet, and eventually the owner of this wallet could be found and maybe prosecuted if he did something or whatever. But people are going to use... Oh, go ahead. I'm sorry.
No, I was just going to say there are a couple of good examples about this. Like, most people don't know about, whenever you have your kind of web browser, you have HTTP and then HTTPS. And that the S is kind of like SSL. It's just encrypted, right? So you can put your credit card and bank accounts and whatever. Like people, like regulators in the 90s were scared that was going to be used for illicit payments, right? It's the same thing with Uber. I mean, like I remember when Uber was starting, I'm old enough to remember that, where people were like, oh my God, strangers are going to go pick you up in your car. And and I think people are forgetting that most of the world are just good people, right? And just
exactly.
Kind of prohibit the advancement of technology. Obviously, you add all the security precautions. It's just one of the same recurring things that people are just
debates. Yes.
So, yeah,
it's a cycle of debates that's gonna come up with every different project up until people adapt it and use it more. We saw a huge market fall recently. We saw inflation and recession. Where's the crypto world standing in those? Is it a hedge against recession and against inflation? How do you view crypto against these?
Yeah, so I mean, really, just this, like in very, very short, what's going on in the macro world, right? Like we had COVID. No one was working. Economy stopped. You had to just print a lot of money, give a lot of money to people, or else, people were just not going to be able to eat. You kind of overdo it. You have rates at zero, so people are borrowing, buying houses, whatever. And you see the result of that is just all asset prices going up. There's not one bubble in anything, maybe like meme stocks or whatever, but like, you just have like everything going up: real estate, equities, bonds, what's it called? Crypto, everything.
Car prices.
Right. Yeah. Right. So
even toilet paper prices.
Yeah. I mean, yeah. So the point is that when you have the exact thing that is making all these assets go up now turn into 180, I mean, you just have to, like, it's very illogical to think that those things are not going down.
Right.
This is a very different inflationary environment, right? Like, people usually refer to like the 70s because it was the most recent one, where real estate and gold performed really, really well. But this is a very different, this is not the same kind of inflationary period, right? I mean, you have the Federal Reserve, who is literally on the 180, where they're raising rates and taking money out of the system. This is like completely contrary to whatever we've ever experienced. And by no means I'm a macroeconomic specialist or analyst or whatever.
Right.
You can just really see the writing on the wall that people talk about, Bitcoin is not an inflation hedge, but gold didn't do anything, right?
No, and if we look at the data, again, this is not an investment advice, but if you look at the data of Bitcoin through the past 7, 8, and 10 years, you see that it's going up in a way. It has its cycles where it's going down, but where it was 10 years ago and where it is now is at a much higher price. It could be taken as a hedge against recession or inflation. But I'm curious to understand if, okay, we're seeing a recession right now. Feds are pulling money out of the market. Do we just focus on the use case of crypto and how much developers are using it and how many projects are being built on top of it? Or should we focus on the value of it right now in terms of currency values?
Yeah, first, I don't know if we're in a recession just yet. I know the technical term is 2 consecutive quarters of negative GDP,
right.
but the job market is really, really strong. Unemployment is still very low. I don't deny that we're heading there, but that's what it is for now. As far as crypto, you can try to time these markets, and there are more opportune times to enter and exit, right? But as far as developers will always develop, right? And the best inventions have been created during down cycles. And the reason being is because cost of capital is much higher, right? So people are just just the greatest founders are just way more conservative with their cash. I would not overlook this space just because prices are not moving, right? Because this is the very time to take advantage, right? I started this fund really on the premise to just take advantage of the current, just have the best starting point possible, right? Which is everything is low. And this is the best time because you just have so many founders who are developing amazing projects who are just going to revolutionize the way that how society is constructed now.
Right.
And you won't really realize it until a few years down the line, which by then is just too late.
This brings me to I'm coming up to my last couple of questions. You mentioned in one of the articles, and that really caught my eye, that crypto assets will not be able to really reflect their true value up until we see policies and regulations become stable. Could you speak more about that? Could you explain that, and why do you think that is the case? And do you think that we need to see regulation in crypto to have a better ecosystem?
Well, yeah, I mean, if you put money in the system, the assets go up. If you take money out, it's hard for it to also go up.
Right.
I think that you're just not we're not at the point where we used to be the past 12 years where just CPI was inflation was steady 2%. Rates were kind of stagnant and assets can kind of there is alpha there in a way, right? Maybe not the last 12 years, but pretty much when there is no Federal Reserve intervention, it's just very, very hard especially for technology and crypto in a rising rate environment, and also a lacking and currently extracting liquidity out of the market. It's very hard for those assets to thrive, right?
Right.
You need to be at a point where things are just stable, and just kind of hey, where rates are just stable. Money in the system is whatever the money in the system. That's the money in the system. Let's just kind of now real growth companies and innovation can go. As far as regulation. There definitely needs to be regulation for 2 reasons. Number one, you definitely want to protect consumers.
Okay.
You know, it is somewhat of the wild, wild west. Like, I'm not going to deny that, unless you have the right information, not necessarily insider information, but knowing where to source that information, whether it's on Discord or Twitter or whatever. It's very, very easy to like be susceptible to these things and just kind of like, you know, get scammed or whatever. Number two, you would want to have it because that's when big money can start coming in, right? And if institutional capital comes in, you just see the space really, really thrive because it just unlocks a lot of capital for founders and builders and developers.
Going back to the beginning, you were telling.
Sorry.
Oh, no.
Just to that point, I just want to be clear. Like, I don't think the regulation that they are currently offering is not going to be what's going to be final.
Okay.
I just don't think it's sustainable that you're just going to have like you're going to regulate these things as securities just so like only accredited investors are going to be able to invest. I just don't.
Right.
I think it's going to be political suicide, and I just don't see it happening. I think there's probably just going to be somewhat of a compromise in the middle.
Right, and I think treating them as securities is one of the things that will maybe kill the system in a way. Because I mean, heck, I can go down to Vegas, take $1,000 with me, and go gamble and lose all the money, and no one's literally going to care for me. While if I'm trying to invest in a project that I have really conviction in, people are going to be like, no, it's a security. You have to be accredited. You have to whatnot and whatnot. I think the way to go around it is to educate people, have them take an exam, maybe just like a driving license, make them understand what are they getting themselves into. By taking an exam, if they pass the exam, then they could become accredited investors and invest. I think that could be a solution around this whole thing. I may be wrong, but this is a point of view I have.
Yeah, I don't know. I think we're just gonna have to see what happens.
Yeah, going back to the beginning, you mentioned that you were co-founder too of SolSphere, right? A question I would have here: what is Metaverse, and what is SolSphere on top of Solana?
I think
what's the use case of the Metaverse?
Yeah, again, just like Web3, I mean, Metaverse was just one of those buzzwords last year.
Right.
I think probably the most fatal buzzword.
Right.
You know, you kind of were creating this kind of Oculus where you just kind of put these headsets on, and I don't know. We probably will get there eventually. I just don't see it happening in the near future.
Okay.
Metaverse is like, you know, there are two sides of the coin, right? Because I can argue right now we're in the Metaverse, right? Like,
right.
I think we're both in Los Angeles. Like, we could have just done this in person. It is just way more efficient to do it right now, right? You go to a restaurant. I mean, just imagine somebody who's like, you know, from the 1980s, and they just put them in the future, and you put them in a restaurant. The restaurant is the same relatively, right? But you just see all these people taking pictures on their phone and just like uploading it. And you're like, okay, maybe the digital image of ourselves right now is equally, if not, I can argue more important than the physical representation of ourselves.
Right.
And when you kind of think of it in that lens, it gets really, really scary because you're like, wait, maybe we are already in the metaverse. So I think I don't really see it as that kind of Ready Player One. You just put this on and then you interact with everyone. Like, for sure, no. Not for sure, but I don't think so. But I think to have more of those experiences become more efficient and easier, and I don't know if that's with AR or VR or whatever it is. I think just having more of a digital life is probably going to be a representation of the metaverse.
Okay.
If we're not in it already.
Right. It's a hard concept to grasp. People have to really think about it to grasp the whole concept. What is SolSphere? Where did the idea come from to be on there? What does it do now? Like, what are the utilities people could use it for?
Yeah, sure. I just also want to be clear. Like, I co-founded the project, but my other co-founder, he took over, and I'm not.
Okay.
I'm not really a part of it anymore. But really, our vision was that, again, like, you know, all these people are buying NFTs. Like, it's fun. Right. To buy these things, and if you like the community, you like being a part of that, you like the art, whatever it is, like you have so many of them, people are just buying these things, especially on Solana, where it was just now like the cost to produce it. I'm sorry, the cost to acquire it was just so cheap because there were no gas fees.
Right.
So you had so many of them, but we just noticed that, like, you know, hey, you want to just like you have like, I don't know, like a watch collection or something, like you just want to be able to kind of in a digital manner just kind of show off to everyone. Right. And there was nothing like that. So we were like, hey, let's just create digital land, right? Not in the purpose of digital real estate, which really has no purpose. But digital land where, like, you know, you can just get this link, you know, post it on your whatever social media bio you have. And then somebody can just go click on it and just kind of see all these NFTs in like a very nice, central and distributed billboard fashion.
Okay, that makes sense. So it's more of a social game in a way to show off the NFTs you have on this platform. Right,
that was our idea, and I mean that project really showed me exactly what tools creators and people are going to be needing in order to create NFTs in the future, because it is like it is just so not transparent as far as like what people are going to be using, and when you know that, you can invest in the tools, and as long as kind of the space compounds exponentially, of course the tools will do the same.
Right. Last two questions, or last question, in fact. Let's say you had Andreessen and Horwath's money, A16's money. You had a big fund, $350 million, $1 billion, $2 billion fund. What projects would you invest in, or you have your eye on that you would invest in? And second question is, what would you, if you had a group of developers, you have all this amount of money, what projects would you tell them to go and build?
Would you put more money in Adam Noman's startup, or?
No, I wouldn't.
No, I'm just joking.
I mean, again, you know, in terms of what Andreessen and Horwath did, they did a great thing. They're investing in assets, basically. They're investing in real estate.
Exactly.
If they have an equity in this real estate, 10 years later, they're going to have the equity in the real estate. His startup, I have questions about it. And you know, the man created WeWork. We laugh about WeWork, but he created something of a $2.3 billion value and maybe more. Everyone still speaks about WeWork, although we call it a failure, but everyone keeps speaking about it. So everyone trolls the guy, but I think he's a great storyteller. He's a great visionist, and he's doing his thing.
For sure. And you said it beautifully that, like, you know, the consensus and sentiment was that what are they doing? Like, they're investing $350 million in this guy's startup that failed, and they made a show about it. And the show was great, by the way. Right. But I mean, like, people don't realize that, hey, you know, if he's putting the real estate up, he bought like 4,000 apartment units in like the South Belt. I believe Georgia and Florida and those high growth areas. He bought like $1 billion worth of real estate, and you're getting the real estate. So even though the guy completely fails on whatever vision he has, your downside is owning this, like, you know, pretty good multifamily real estate.
Exactly.
Cash flow. No. So like, it's only upside if the guy was able to recreate what he did last time, and there's really just like the downside is limited. So yeah, you said it beautifully. What would I invest in? I truly believe I would just invest in the things that I mentioned to you, just my thesis, right? Like those are the things where I believe that when assets are really able to kind of growth assets are really able to kind of reflect their true value, you're going to see those things happen. And the reason being is because in crypto, if you notice, every bull market starts with a new way of capital formation and distribution.
Right.
Like Bitcoin was like the first one to put all these people together and create a network of digital gold. And then you had Ethereum. And then you had DeFi summer of 2020. And then you had NFTs of 2021. And you just have to like picture like, okay, where is that market going to be where there's going to be new ways to kind of like bring not only money as far as capital, but human capital together. And I truly believe it's in these things, right? The things that you're incentivizing people that you couldn't have done before with the traditional rails, right? Like for example, with what I was telling you about Helium, like you can't just pay somebody in Africa or Asia, like there's no Venmo. Like the PayPal is
exactly.
going to work. You can't build on top of that. So you can't incentivize those people. You just unlock the entire world's capital efficiency and liquidity. What would I build? That's a good question, but I think it would just fall in the realm of that business model for a sector that is highly prone to disruption, right? Like with a large addressable market that's continuously compounding and something that you can really just kind of like, take advantage of.
Right. Brandon, amazing episode. I learned a lot. And I mean, if you agree to it, if I could have you every quarter, so every 3-4 months, I'll have you back on, listen to updates, what do you have that's going on that's new, because this was tremendously helpful. I learned a lot. I bet everyone who's going to listen to this is going to learn a lot. Thank you for being here. We covered a lot, covering the basics through some really deep analysis you have. I love the whole episode. Any links, any shout outs you want to plug in? Where should people follow you to follow what you're doing? Are you hiring? What roles are you hiring for? Anything you want to plug in, feel free to do so.
Yeah, I mean, if you want to find me, you can just find me on Twitter. It's at Brandon_Halavi, HALAVI. You can just like you did, you can just read my articles on, you can go on coinark.capital, and you can just find our Medium blogs. I'm currently hiring for marketing, client relations, and 2 different analyst positions. So anyone who's just kind of like, they want to join a thesis-based startup with very, very high knowledge of not only the information in crypto, but just where to find information. That you know where to find me. So
that sounds great. Thank you again for being here.
Thank you for having me.